It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's already Thursday evening, May 26, 2016. Another exciting newsletter for you tonight. Crude, S&P, gold, and euro on the schedule here this evening. We have some great trading opportunities ahead of the holiday weekend, Memorial Day weekend coming right around the corner. With an early close of the session tomorrow, we will be looking for early opportunities in the trade room. Crude oil and gold are both bearish. The euro is looking pretty good at the bull side tonight, and the S&P appears to have already started the holiday a bit early and is trading sideways going to Friday's trading session. Got a great video, got a great newsletter for you guys, and some great charts to look at for tomorrow. Tons of learning and earning opportunities tonight. Before we jump into the newsletter, though, I do want to remind you, the only place to watch the full-length version of this nightly newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video. Follow that link and come join me here on our trading blog so you can watch the full analysis and the full-length video. Don't forget, while you're here, if you're not an advanced member of School of Trade and you'd like to grab a free pass to come out and test drive our trade room, you can grab your free pass in the upper left-hand corner. Also, don't forget to join our nightly newsletter mailing list in the lower left-hand corner. Register for the mailing list, and I'll send you an email every evening right around 7:15, 7:30 when this newsletter is ready to be watched every evening. Promise no spam, nothing but the good stuff regarding this newsletter. Right below the video, don't forget you can download all the charts that you see me using in tonight's video. You can download those charts by following that link below the video on our blog. And over on the right-hand side, I'll encourage you to learn more about the who, what, where, when, and why. Join our trial membership on the right-hand side and learn more about what it feels to be a member, all the strategies we use, and of course, learn all the details about what it means to be a student here at School of Trade. And don't forget, I've always got someone sitting by 24/7, 365 to answer all your questions. Hope you guys had a great week with us. Don't forget, we have a holiday weekend right around the corner. Tomorrow's going to be an early in, early out scenario. We will have our trade room open tomorrow morning at 8 o'clock Eastern time. We are seeing an early close, though, on the calendar, so be aware. Tomorrow will be expected to be a little bit lower volume and, of course, early in, early out scenario for tomorrow. Also, this is the last newsletter of the week. If I don't see you guys tomorrow morning in the trade room, I will see you guys not next Monday. Next Monday is a holiday. I'll be back next Tuesday evening for our next edition of our nightly newsletter. Let's not waste any time here. Let's jump in, check the schedule for Friday, May the 27th. First things first, let's check tonight's schedule. We have some major news coming from our good friends in Japan. 7:30 p.m. Eastern time, just shortly after I send out this newsletter, we're going to hear the consumer price index. Everyone's watching inflation right now, and this will be no different. So if you're trading the Asian session, Australian session, or early in the London session, be aware we do have some major news coming out of Japan tonight at 7:30 p.m. Eastern time. Then we go into Friday, May 27th. As you can see, we're pretty much empty here in the London session. We've got GDP at 8:30, consumer sentiment at 10 o'clock. We got my gal Yellen at 1:15, and that, of course, will be the finish off at 2 p.m. tomorrow. I would recommend, like I do every Friday, get in early, make your money, and get out and enjoy the beautiful weather. Hopefully it's turning for you wherever you are on this planet. And of course, early in, early out scenarios on Friday. My rule of thumb on Friday is after 11 o'clock, I'm not adding to any new positions after 11 o'clock. You're more than welcome to hold positions later on in the session, but with that early close at 2 o'clock and Yellen on the microphone at 1:15, I'll be surprised if we see any real volume coming into the market after about 10:30 tomorrow morning. So I would be watching closely after that consumer sentiment number comes out tomorrow morning at 10 a.m. in the U.S. session. Most important thing, though, is the GDP announcement tomorrow morning at 8:30 a.m. And then again, after 10 a.m., I do expect the volume to drop considerably. So protect your capital. Enjoy the holiday weekend. Be safe. Make sure you come back with all your eyes, all 10 or 11 fingers, right? That way you can keep doing your job, right? Don't have too much fun over the holiday weekend. And don't forget, Monday markets are closed. Our trade room will be closed on Monday as well. I'll be doing some much needed resting and relaxation, and I hope you'll be doing the same thing with your loved ones as well. So be safe out this weekend if I don't see you guys in the trade room tomorrow morning. You got the schedule ready for you, though. We got some news early, and again, like I said, expect it to be dropping off pretty significantly after we get past 10 o'clock tomorrow morning. Let's start with crude. We'll go crude, S&P, gold, and the euro. Get some pretty interesting charts here. Lots of learning and earning opportunities here on this newsletter tonight. Crude is bearish and trying to finish rotation off the highs of a bear channel this evening, but major support levels are getting in the way, which tells the buyers look for a trap high for the most reliable selling opportunities tomorrow. The bulls had control for the beginning of the session today, but after the buyers tried twice to keep price above the $50 a barrel level, the sellers had an easy time taking control and sending price back lower. We have a bear channel that is trying to complete rotation back to the lows, but the measured moves, those levels are making it very hard for the sellers to find ways into the move right now. With too much support below us, we can expect price to move higher back to prior levels of resistance so the sellers can sell high or break down below the support so sellers can use it as resistance on the way to the low of the channel tomorrow. Buyers will have a short-term opportunity to buy a pullback above the triangle high with a target up to the next level of resistance, but don't mistake this right now. This is a bearish market, as you can see right now. A couple components here on this chart. Let's talk about the most important clues that we're seeing on the chart this evening. First of all, we have a couple bear channels here right now. The first channel, of course, started on the way down earlier in the session. We had a double overshoot of that minor bear channel. That corrected higher. And then just like your typical double overshoot did, it failed to retest that low and tried to go higher. The buyers, though, get nothing above the moving average and just keep getting sold right back down. So rejection twice above the $50 a barrel, big round number, ends up with prices pushing lower here with the bear channel double overshoot, and they're trying to retest that low as we speak right now. The second channel is really the most important channel right now. You can see the larger channel that I have marked up on the chart right now, and we're trying to finish off rotation. We're trying to go from the high down to the low, back to the high, and then trying to finish off that rotation back to the low. That's the target right now for those sellers, and obviously we have some support in our way right now. Measured move number 1, 49.27. Triple measured move, 49.18. Double down at 48.99. Those are going to be, now obviously the measured move areas are clearly areas of support that sellers are struggling with right now. But if they can get through those areas, the double down is going to definitely be a juicy target just below that $49 a barrel level. One last thing, we do have a triangle on the chart right now. This is a bearish triangle. Triangles are pretty much the same thing as trading ranges. We want to either look for A, price to make a new lower low, breakout pullback. Now that breakout pullback you can see is probably not going to be as desirable because they have major support levels in the way. The second way to trade a bear triangle, again, because the support levels are in the way, keeping sellers from really being interested in selling low like this, we expect now to see a trap high. Trap highs are very common when sellers are interested, but they won't want to sell into support. They won't even bother, That lack of interest from the sellers, price will rise. As price rises, they're targeting prior swings overhead, and of course they're waiting for a trap, buyer failure, to sell it back down. That will be the most desirable way for sellers to participate in this market going into tomorrow's session. Again, because that support area here, and because we have literally multiple support areas here, we saw that today, by the way, in real time as price tried to push through that $50 a barrel. If you're with me in the trade room today, we watched that happen live in real time this morning. Now it's happening again. This time the sellers now are trying to find interest selling lower, and there's just too much support in their way right now. What happens is the sellers won't even bother. They won't even try to sell low here because they know they're running right into key areas of support. So the lack of sellers will allow the buyers to participate and bring price higher until what? Until the sellers find interest in selling at a much higher price to bring it back down. So sellers right now basically have two options: breakout pullback into support. If it does successfully break down, look to get below those triple measured move areas and use those measured move support areas as resistance to finish off the target down to the double down and down to the low of that of that bear channel. If it doesn't want to make the push lower, and it will require some strength to get those sellers comfortable to, again, use support as resistance on the way back down. If it doesn't want to push lower, it's going to want to push higher. This is where the buyers are going to have their small window of opportunity. Breakout, pullback, hold the high of that triangle. Try to, if we can, try to use that triangle low and the triangle high. That would really be the most reliable way to take that thing long. But do not confuse this, though. This is a bearish market, and as soon as the bulls get back up to these swing highs overhead, difficult to tell where it's going to go, how high it will go, but eventually here, though, sellers will find interest at higher prices. If I had to guess right now, I would say it's probably going to be in this area right here between 49.88 and 49.79. Wait for those bulls. Take the price up. Buyers look to sell the to buy the pullback. They fail. This is where we look for that classic scenario: failure into strength, strength into pullbacks, buyer failure into strength, strength into pullbacks. Watch out for this rising support trend line. Look for the breakout pullback there. Watch out for the high of this channel. It will act as support. Breakout pullback there and right back down. Make sure you're not buying into resistance overhead. If this thing does turn to a bull market by breaking out and pulling back and holding above, make sure you keep an eye on the resistance targets overhead if you're a bull. If you're a bear, you either need to be very careful trying to sell that breakout pullback because of the support area waiting below. Better idea to be waiting for price to correct higher, buyer failure into strength, strength into pullbacks, and pullbacks back down to that low. Don't forget, be careful as you're selling it down. Don't sell into support because there are a few trend line support areas, though, that will sneak up on you here tomorrow. Looking good there on the gold, on the crude right now. Definitely wouldn't want to be a buyer yet, but we definitely can see there may be some buying opportunities above that triangle on the oil market tomorrow. How about the S&P? Boy, I can already smell the barbecue grill when I look at this chart. S&P is still trading inside the same range from yesterday. And with the recent failure at the low, we now expect the pendulum swing to take price back to the highs and targeting the next expansion level overhead. Our plan for trading a range is still the same as it was yesterday. Buy low, sell high, avoid the middle, don't fiddle in the middle, and focus on failures with the pendulum swing until this market finds a direction. It looks like the S&P may have already got the holiday weekend off to a start already. You can see here, very low volume today. You can see how few candlesticks we actually saw today. This is the same chart from last night. And you'll notice here that perfect example of rotation, which we talked about last night. Bull move into the range. What does that mean? That means buy the lows, buy the lows, buy the lows. Look at the wicks on these things. You can see buyers got long at the lows. We talked about this last night in the newsletter. If you didn't watch last night's newsletter, remember what I try to do is I try to build every day on prior videos that we've done. So it's important, if you can, I know we're busy people these days, but it's important that you can try to watch all the newsletter videos because I went over very specific details about this particular strategy in last night's newsletter video. You can find that just by scrolling down our blog, or there's a button right on the homepage of the blog at Sideways Markets called Nightly Newsletter, and you can watch all the previous videos there. So we talked about the bull market going into that trading range, and we talked about really the best way to do it was to buy the dips, buy the lows, and of course we know there's a pendulum right here, and that pendulum now has swung lower, and so now we're expecting price to swing higher. Measured move target, well, actually, target back at the high of the range, target back at the measured move, but really those bulls are going to be trying to get up to that 96 half area overhead just because they failed to get the rotation back below, right? So pendulum swings back up, and we expect to see that move. Try to get through that measured move here tomorrow.